Hello, and welcome to today's video. Today, we're going to tell you 5 incredible stories of tax evasion. We are sure that you know some of them, but others are completely unknown to you. Let yourself be fascinated by the 5 extraordinary personalities. We are talking about Al Capone, Leona Helmsley, Wolfgang Flöttl, Bernard Madoff, and Sergei Polonsky. Alphonse Al Capone, born January 17, 1899 in Brooklyn, New York, was one of the most notorious American criminals of the 20th century. He was a gangster boss known for his crimes related to prostitution, gambling, and racketeering. However, one of his most famous crimes was tax evasion, for which he was ultimately convicted for the longest time. Capone was first arrested for tax evasion by federal authorities in 1924, although he was arrested several times for crimes such as prostitution, bootlegging, and other offenses. However, he mostly failed to be convicted of these crimes. He served his first prison sentence at 10 months in 1929 for gun possession. However, it was assumed to be a staged arrest. Because of his connections, he was transferred to a Philadelphia prison from where he was able to continue his business. Federal authorities eventually discovered that Capone was evading taxes not only on his illegal businesses, but also on his legal earnings. Capone was eventually convicted of tax evasion and falsifying tax returns in October 1931. It is estimated that Al Capone evaded at least $100 million in taxes. He was sentenced to 11 years in prison and fined $50,000 plus court costs. After his conviction, Capone spent 6 years and 8 months in federal prison in Atlanta and then 1 year and 9 months in federal prison at Alcatraz. Released for good behavior in 1939, he spent the last years of his life on the family estate in Florida until he died due to illness at the age of 48. Although he was known for his other crimes, Capone was eventually convicted of tax evasion. In summary, Al Capone's tax evasion is a well-known example of the serious crime of tax evasion. Although Capone is considered one of the most notorious criminals of the 20th century, his case shows that even he was not immune from the consequences for tax evasion. If you like this video, we appreciate a thumbs up and you subscribing to our channel. Leona Helmsley, born July 4, 1920 in New York, was an American businesswoman and philanthropist, best known for her tax evasion. Helmsley was the owner of a widespread real estate empire that included hotels, office buildings, and apartment complexes, which she obtained through her husband, Harry Helmsley, a real estate magnate and one of the richest men in the United States. In 1989, Helmsley was arrested for tax evasion. She was found to have evaded several $100,000 in taxes over a 4-year period by passing off personal expenses as business expenses. These included renovations to her private home, business trips, and other luxury expenses. In 1989, Helmsley was eventually found guilty of tax evasion and falsifying tax returns. She was sentenced to 4 years in prison and fined $7 billion. In total, Leona Helmsley only had to spend 1 year in prison. Despite her conviction, Helmsley remained a controversial figure, described by some as a wealthy, heartless woman who shirked her obligations. She was known for many rather derogatory sayings, including, quote, "only little people pay taxes," end quote. On the other hand, Helmsley is seen by some as a prisoner and visionary in real estate. Despite her condemnation and reputation as a difficult personality, she had a significant impact on the real estate industry and left a legacy that is still evident today. She left her large fortune in parts to her dog, with $12 million, and 2 of her 4 grandsons, $5 million each. The 2 unwitting grandsons sued to contest the will and received $4 and $2 million each. The dog's inheritance was reduced from $12 million to $2 million in the process. As the biggest inheritance of the real estate magnate, more than $5 million was given to the Helmsley Charitable Fund, which cares for dogs. Wolfgang Flöttl is an Austrian entrepreneur best known for his tax evasion. Flöttl was born on October 1, 1955, and founded a successful company in the construction industry and built it into a leading company in Austria. Wolfgang Flöttl was an Austrian banker and financial investor who came to prominence in the 1990s when he and his father Wolfgang Flöttl Sr. uncovered one of the largest fund fraud scandals in the history of the financial markets. Flöttl Sr. was a successful businessman and had founded an investment company called Meridian International in the 1980s. He had numerous clients in the U.S., including wealthy families and foundations who entrusted him with their money to put into risky but potentially lucrative investments. Flöttl Jr. also worked for Meridian International and was instrumental in the firm's closure in the 1990s due to disagreements with regulators. The reason was that the firm had promised its clients to invest their money in a risky investment strategy that promised high returns. However, those returns were never realized, as the money was instead put into risky derivative positions held by the firm itself. When Meridian International's clients demanded their investments back, it became apparent that the firm did not have sufficient funds to pay off all its clients. Flöttl Jr. then turned to the American authorities and uncovered the fraud. His father and himself were arrested and charged as part of the process. Flöttl Jr. then worked as an independent consultant and later founded his own investment company called Intrepid Capital Management. The firm focused on buying risky bonds and distressed companies that were shunned by other investigators. Although the firm was not as successful as expected, Flöttl Jr. was able to use his knowledge and experience in the financial industry to build a new career and make a name for himself as a successful investor. In 2002, Flöttl was arrested and accused of evading taxes amounting to around 70 million euros. He was found to have hidden profits from his company over a period of several years by transferring them to foreign accounts. Wolfgang Flöttl, a successful jet setter from Vienna, gambled with millions of dollars belonging to the Austrian Union bank BAWAG and lost everything. Flöttl gambled away $639 million belonging to the Viennese trade union bank BAWAG with yen speculations, triggering the most exciting economic thriller in Austria's post-war history. Wolfgang Flöttl and 6 other defendants were acquitted by the Court of Lay Assessors despite all the evidence and the confession in the second BAWAG criminal trial. The ex-BAWAG bosses and the Secretary General Helmut Elsner were sentenced to 10 years, Peter Nakowitz to 3 years, and Johann Zwettler received 5 years imprisonment. Due to procedural flaws, Flöttl's sentence of 2.5 years was overturned in 2008 and he was acquitted in 2010. The BAWAG criminal trial, which dealt with speculation and cover-ups of losses, began on July 16, 2007, and has now come to an end after almost 6 years. Bernard Lawrence, Bernie, Madoff is a former American financial advisor best known for his far-flung Ponzi scheme, which was one of the largest financial frauds in history. Born on April 29, 1938, Madoff founded his company Bernard L. Madoff Investment Securities in the 1960s. Over the years, the company grew to become one of the leading market division firms in the U.S., managing billions of dollars in investment assets. However, in 2008, it was revealed that the firm was a giant Ponzi scheme in which Madoff stole investor funds to pay off old debts and fund his own lifestyle. A Ponzi scheme is a fraudulent investment model in which investors deposit money that is used by later arriving investors to pay off earlier investors. The model is named after Italian fraudster Charles Ponzi, who ran it in the 1910s. In a Ponzi scheme, there is no real financial performance or profits, but the profits paid out to investors simply come from the deposits of new investors. Once new investors stop paying in, the model is no longer viable and a collapse can occur, causing investors to lose their money. Ponzi schemes are illegal and can have serious consequences for investors. Tax authorities estimated that Madoff had evaded at least $17 billion. In March 2009, Madoff was finally arrested on charges of fraud, tax evasion, and other crimes. In June of that year, he pleaded guilty and was sentenced to 150 years in prison. Our last case today is about Sergei Polonsky. He is a former Russian businessman, best known for his involvement in a case of tax evasion and financial fraud. Born in Moscow on December 1, 1972, Polonsky studied law and later became one of Russia's most successful businessmen. Over the years, he founded several companies, including a real estate firm called Mirax Group. In 2011, however, it became known that Polonsky and other members of his company were involved in a case of tax evasion and financial fraud. The Russian government accused them of evading about $100 million in taxes. Polonsky eventually fled Russia and remained on the run for some time before finally being arrested in Cambodia after about 2 years. Although he refused to return to Russia, he was eventually extradited in May 2015 and stood trial, debating between 5 years in prison and too much time passed since the crime. Tax evasion is a violation of the law, which is punishable by heavy fines and prison sentences. Tax evasion is the failure to pay required taxes that are required by law. This can be done in a number of ways, such as not reporting income, falsifying invoices, or hiding assets to keep them from the tax authorities. Tax evasion is a criminal offense prosecuted by most countries and can result in severe penalties, including fines and even jail time. Many countries also have regulations in place to help prevent or detect tax evasion, such as reporting requirements, disclosure requirements, and audits by tax authorities. Tax evasion has far-reaching effects on society because when people evade taxes, important public services such as education, health, and public safety are affected because the money needed to pay for these services is not provided. Throughout history, many people have attempted to avoid or evade their tax obligations. 5 individuals who stood out in particular are Al Capone, Leona Helmsley, Bernie Madoff, Sergei Polonsky, and Wolfgang Flöttl. Each of them evaded taxes in different ways, but all of them suffered severe penalties as a result. Tax evasion is not a problem that occurs only in certain countries or regions. It is a global phenomenon that affects many countries, including developed and developing countries. These cases show that tax evasion is a crime that is prosecuted by the authorities and that it carries a high risk for those who attempt it. It is important for all taxpayers to honor their obligations and pay their taxes correctly to support a fair and equitable tax system. Cybercrime and the use of cryptocurrencies and offshore accounts are examples of the new opportunities technology offers to evade taxes. Governments must therefore use technology to prevent or detect tax evasion. That was today's video on the 5 biggest cases of tax evasion in history. Did you know these people before? Thanks so much for watching.